All right, maybe we'll have some people join us live here in a few minutes. I'm going to go ahead and jump right in. So today is another Money Monday live training, and it's called Part 1 of Fundamental Analysis. We're going to go over macroeconomics. So let's just jump right into the content here. Hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday crypto training. As always, I'm your host, Kelly Sunshall. Today, we begin another in-depth series on crypto investing. Our focus will be crypto fundamental analysis, and I'll probably call it FA in a few places so I don't have to say that over and over again. Welcome, whoever has joined me. Thank you so much for being here. Say hi in the comments so I know you can hear me okay. If I'm too loud, I'm going to turn that down a little bit. Seems like that might have been just a little too loud. Let me know how the sound is. So here are the topics that we're going to cover during the next 4 weeks. Macroeconomics, project metrics, blockchain metrics, and financial metrics. Now, I first covered this material back in 2022, so I have updated this to be more current. So today I'm going to define fundamental analysis, then we'll explore part 1, which is macroeconomics. Okay, let's go ahead and get started on the meat here. So, in the introduction, in the world of investing, there is a word that describes the process for selecting a quality asset to buy. It's called fundamental analysis. The process originated with stock trading, but for crypto trading, the process is very different. Let's look at a definition for each. So stock market fundamental analysis measures a stock's intrinsic value, i.e. asset value, by examining economic and financial data. In the equities market, intrinsic value is the value of an investment based on the issuing company's financial health, are they profitable or not, along with current market and the current market and economics, or what's going on with the economy. So now let's look at the definition I have for crypto market fundamental analysis. So crypto FA involves evaluating the intrinsic value of a crypto project by examining key factors such as the underlying technology, the project's team, tokenomics, partnerships, and real-world utility. And there could be others, but that's where we're going to start today. So what is crypto fundamental analysis? Why is crypto fundamental analysis different from stock fundamental analysis? The crucial difference is that most cryptos are not tied to the value of the crypto project that created it. It's very different to do FA on crypto than in the stock market, because of course stocks are tied to the underlying value of the company, and the company only has value if it's making money. It's not the same in crypto. You can't measure that so easily, so we have to look at other things. However, the goal of both stock and I think I jumped ahead of myself, but let me just repeat that sentence. The crucial difference is that most cryptos are not tied to the value of the project that created it. However, the goal of both stock and crypto fundamental analysis is to determine whether an asset is undervalued or overvalued compared to its fundamental worth. An undervalued asset might be a good buy or a long position. An overvalued asset might be a good sell or a short position. Now here's a note. For an investor, fundamental analysis is used to research what to buy, and for a trader or an investor, technical analysis is used to determine when to buy. So we use both of these things when as a crypto investor, fundamental analysis and technical analysis. And today, of course, we're just going to keep talking about part 1 of the fundamental analysis, and that is used to determine what to buy. But when to get in and out, I like to use technical analysis, and we'll cover that another time. I have already covered that somewhat on our Money Monday trainings, and you can find it in the guide section of our Facebook group. So let's continue on with part 1, which is macroeconomics. So macroeconomics is a branch of economics that studies the overall economy, including financial markets, businesses, consumers, and government. We would look at things like the investment markets as a whole, the state of the crypto market sector, the domestic and global economic environment, the competitive crypto development landscape, among other things. But those, I think, are the top four. You can think of macroeconomics as a top-down approach to data analysis. Specifically, it examines broad economy-wide data such as inflation, general price levels and market sentiment, economic growth rate, gross domestic product, unemployment, interest rates, and national and world news. So why should we apply macroeconomics to crypto markets? Well, one excellent reason is that crypto markets tend to react very quickly to external macroeconomic factors. And because they respond so quickly, it can create volatility quickly, which could be a good or a bad thing depending on where you are in your trade. For example, regulatory pressures from the United States, the European Union, or China could have a significant impact on the price of cryptos. Additionally, when the Fed increases or decreases interest rates, the markets tend to react dramatically. For example, in 2022 and 2023, the Fed raised interest rates continuously, effectively shrinking the availability of money. Higher interest rates means it's more expensive to borrow money, and this affects businesses as well as individual people and causes fund managers to take money out of risky investments like cryptocurrencies. On the flip side, in 2024, the Fed is talking about decreasing interest rates. Lower interest rates tend to make the markets go up. The availability of cheaper money allows businesses and crypto projects to expand and potentially have profits to rise. Rising profits, of course, cause market prices to rise, allowing money managers to take on more risk and invest in more crypto. And then it becomes kind of self-fulfilling prophecy. Now I'm going to go over 4 macroeconomic topics that you could consider when doing your own fundamental analysis research. Number 1 is the state of the crypto investment sector as a whole. Are the crypto headlines positive or negative? Bad news like a hack or a collapse, or good news like technology breakthroughs like AI, for example. Now, there have been years where the news, even during a bull market, the news has been bad, which put a damper on prices rising because of hacks or, the FTX collapse or the banks collapsing. So the macro news absolutely affects all markets, including crypto markets. Number 2 is the state of investment markets as a whole. What is the current market cycle? Are we in a bull market or a bear market? And what part of the bull or bear market are we in? The beginning, the middle, or the end of it? It's really helpful to know these things, and you got to zoom out and look at things from a macro perspective to figure that out. What emotion is feeding the markets? Fear or greed, euphoria or concern, or somewhere in between. Now, there is a wonderful website. It's called the Fear and Greed Index website, and I'll put that link in the comment section for you. And this gives you an idea of, especially for crypto, where we are on the fear or greed index. And we are right now, I just took this image today, we are still sitting at extreme greed, which means we're at the top of something. So we're either going to keep going, or it's going to, oftentimes once you get to a really, really high number of extreme greed, then things start to trickle back down a little bit. And we're in a bull market, so they're probably not going to trickle all the way down like 80 or 90%. But I do expect some kind of a pullback when we get this far into the extreme greed. Okay, number 3 on our list is the state of the domestic economic environment. What is the status of inflation? Is the government printing money, as always? High inflation means less buying power. Less buying power means a slowing economy. What is the status of unemployment? High unemployment means people can't buy crypto. less money going into 401ks, and less money to invest in general. And lastly in this, number 3 is the status of the GDP, gross domestic product. And there's places where you can look that up, and I'm going to give you a resource here at the end of this training. Okay, we have some more under the status of GDP. We have it's reported quarterly, so you can find the number and compare it from one quarter to the next. Rising GDP means, of course, businesses are doing well, and a declining GDP means the economy is slowing. Number 4, the state of the global economic environment. Study interest rates of major global powers, like is US and China or Japan or Korea or someplace like any of those other places. Are they following the Fed in the US, doing the same thing? If our Fed is raising rates, are the rates being raised other places in the world? Because crypto, of course, is worldwide. And so whatever's going on in our country as well as around the world can definitely affect prices. Are they following the US and raising rates or lowering rates, as I just said? Are other countries banning crypto or expanding crypto, or are they somehow constraining it? What kind of sanctions are in place, if any? So this is just a general overview of the kinds of things that you can study in macroeconomics. And I think I've given you a lot to think about for a fundamental analysis of macro news, basically. And of course, it may not be necessary to study all the topics that I just presented, but this list gives you a good, solid place to start. And a great resource for staying on top of macro news and other macroeconomic data is Lynn Alden's newsletter. She's a really, really good investor. I don't even know what to call her. I don't know if she's a fund manager or what, but she's actually an amazing woman that does some amazing research. So I will put, you're welcome, Todd. Thanks for being here today. I'm going to put I'm going to put this link in the chat right now in the comments. So you'll have the link now to Lynn Alden's newsletter. I highly recommend signing up for it. And that's all I have for today. I really appreciate you all joining me. I am a little bit tired today. I had to get up at 5 o'clock this morning because I have signed up for a new training. You guys are going to benefit from all that I learned from this new training. And it's a bit early for me, so I apologize if I'm not as peppy or spunky as I usually am, but that's why. So I appreciate you all joining me today. Next week, I'm going to continue on with part 2 of our 4-part series, and we're going to cover project metrics. And I guarantee you, the next 3 parts, part 2, 3, and 4, are going to be very interesting. The macroeconomics one is kind of the most boring one of the 4, but it's still necessary to know what's going on. And it doesn't take a lot, in my opinion, to figure out what's going on in the macro environment if you just look a little bit. And if you have one good newsletter, that's probably all you need. So I think that's all I'm going to have to say for tonight. I'll see you all next week. Hope you have a wonderful rest of your evening, and hopefully some of you got to see the solar eclipse today. So signing off for now. Talk to you later. Bye-bye.